Hello and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Monday the 10th of June. We've got a fairly positive outlook actually across markets today. What we've seen is there has been a stabilisation actually on Treasury yields. There's been an improvement in risk sentiment that came on the back of an announcement on Friday that the US was going to delay these tariffs that it was proposing on Mexico, and that has helped to improve the trade picture a little bit. This is the interesting chart there, considering that the non-farm payrolls report was quite disappointing pretty much across the board on Friday. We still hadn't seen a breakdown on Treasury yields. Actually, they've started to pick up with this news of the US delaying the tariffs on Mexico. So that's certainly helping the US dollar to pick up again, which dollar had been under pressure, and that's ticked a little bit higher. And also we're starting to see these safe haven plays which are starting to reverse some of their gains. Look at that move on gold, $12 down on the day. Gold actually broke above on an intraday basis, broke to a 2019 high on Friday, but back $20 since that move, and it is now threatening to turn into a more of a corrective move outlook on the near-term basis. FTSE 100's higher. You've seen S&P 400 and Wall Street breaking sharply higher again on Friday. We saw those markets around about 1% higher. Big strong move to the upside. You've got futures which are another 0.4% higher today, and FTSE is following them in that way, and certainly remains pretty decently positioned. You've got France and Germany on national holiday, public holiday today. But broadly speaking, we're looking at the dollar stronger across the board as it starts to reclaim some of those recent losses that it's been facing. That sort of takes us into what we've got on the jobs, on the data front today. Now, the data has been a little bit in terms of sterling and FTSE, sterling and GDP. The data came out today. Disappointingly, look at that month-on-month. April down 0.4%. That's much worse than the expected of negative 0.1%. So that really is the Brexit-related stockpiling issues sort of flowing over into the April numbers, really, where companies were stockpiling ahead of Brexit. Didn't happen as the Article 50 got delayed, and then subsequently April seeing the negative aspect of that. So that's hit sterling today. But broadly speaking, the only real data of note from the US side is into the afternoon with the jobs numbers. They are at 3 o'clock, and they're expected to be there or thereabouts where they were last month. The jobs openings at 7.48 million. So that takes me to my chart of the day, which is Euro Yen. Now, Euro Yen is interesting because what we have seen is Euro Yen sliding over the past 6-8 weeks. Now, that breakdown of 23.40 to 23.75, this old pivot band that's been in place throughout 2019, could come back into play again as a result of this downtrend being broken. We've seen a few sessions of improvement getting put together, but generally speaking, look at those MACD lines still. They are negatively configured on a medium-term basis. It just looks to be an unwinding move at the moment. RSI tends to come back towards 60. That would be there or thereabouts where the RSI would be if 23.40 to 23.75, that pivot band came back in. So I think that would be a decent area to start to look for another sell signal, because I think that this is still a market under pressure. I don't anticipate this being the start of a big serious rally on the euro against yen. I think it looks like it's going to be an unwinding move that's likely to find resistance of the overhead supply before selling off again. So this is a move that's progressing. You do still have a little bit of upside potential in that move, around about 60, 80, maybe 100 ticks of upside. But in due course, I would expect to see the overhead supply kicking in and likely to see the renewal of the negative move. But in the near term, you've got support of a near-term breakout 22.40, which is not necessarily come into play yet today, but I still think is a level worth keeping an eye on. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.